Hello friends, in the series on the income tax cases, today we will discuss the case of Principal Commissioner of Income Tax versus SALARPURIA Simplex Dwelling LLP. This case has been reported in 455 ITR page number 712. The matter has been decided by Honorable Calcutta High Court and the date of the judgment is 26th July 2022. As all we know that the principle of res judicata is not applicable for the income tax proceedings. The principle of res judicata says that every assessment is a different assessment year. Whatever the law has been applied in 1 year may not be applicable to the another year, and one assessment order should not be taken the base of the other year. But at the same time, there are a series of judgments which says that in the light of principle of res judicata, the principle of consistency should also be kept in mind and the principle of consistency should not be ignored. As all we know that the income tax department tries everything to desettle the things which are settled, whether it is through the enactments of law and whether it is by in passing the assessment orders. This is the perfect example of this thing. The assessee was a developer of flats. The assessee was in the business of developing the flats and selling those flats. Meaning thereby the assessee was in the business of construction of flats and selling them to the various customers. The assessee was following project completion method. The broad concept of project completion method is that it is a very common practice in the construction business is that when the flats are developed by the developer takes the advances from various customers and then start making the building. The assessee was accepting these advances and was showing these advances as a liability in the balance sheet because the assessee has to deliver the flats, and when the delivery will be made, then these advances will be treated as sale consideration. At the same time, when the expenses were incurred for the project expenses, all those expenses which were incurred for developing those flats were shown as work in progress in the balance sheet. This was the broad concept of project completion method adopted by the assessee. But for the assessment year 15-16, the case of the assessee was picked under section 143 subsection 3 scrutiny on the plea that in spite of project completion method, the percentage completion method should be adopted. But during the assessment proceedings, in spite of giving all the justifications for the adoption of the project completion method, the assessing officer go ahead with the percentage completion method and made some additions because by adopting the percentage completion method, some tax liability was there for the assessee. So just because there was some liability under the percentage completion method, the assessing officer disregarded the project completion method adopted by the assessee on the plea that according to the accounting standard 7, the percentage completion method should be adopted. The assessee went to the CIT appeal against the order of the learned assessing officer, and the CIT appeal upheld the point of the assessee that since the assessee was following the project completion method since a number of years and the department has accepted that method, so this year also without change in facts and circumstances of the case of the assessee, the method should not be changed, and the order of the CIT appeal was upheld by the Honorable ITAT. As a ritual, the department in this case also moved to the Calcutta High Court, and the Calcutta High Court also upheld the order of the ITAT and said that there was no need for disturbing the method adopted by the assessee, that is project completion method, and replacing that method by percentage completion method just for the sake because there was some tax liability under the percentage completion method. So friends, this case is a perfect example that consistency has a very big role in the fiscal laws, especially in the income tax laws. At the end of this video, once again I am repeating the name of the case. The name of the case is Principal Commissioner of Income Tax versus SALARPURIA Simplex Dwelling LLP, and this case has been reported in 455 ITR at page number 712, and the matter has been decided on 26th July 2022. Thank you, friends.